Hi, Richard Martin, Thursday the 2nd of September, and this is a chart of the Dow. Looking at the trading plan going forward, we have a little bit of uncertainty given the strength of the move last night. Very powerful move, but this you have to, in order to assess this and look at the alternatives, we have to gauge what this leg is, and these are effectively an ABC correction down at this point. So in other words, this is correcting this move down here, which is also an ABC. So a little bit of uncertainty about the alternatives is current, but what we do have to do is try and trade the direction. So in order to get a gauge of this, we can measure what would be likely to occur, and you can see here that if we put a Fibonacci extension on which measures these two legs, where this is likely to go in the event that the upward bullish momentum is sustained, and that is that 10,619 would be a first level target in the event that we do get strength moving up. And indeed, if this was broken and we had a run up into September, a bullish run up, then the next level that we'd be looking at would be indeed around the 11,000 mark. Now that's not assured for sure, but we have to look at the alternatives. So what would be likely to occur if that did not unfold? Well, this would come up in a classic wave 4 formation, and we can measure where that's likely to stop by putting a Fibonacci retracement on. 61.8% is the upper edge, which would also run with the 200 moving average, but generally when the Dow does correct into wave 4s, it pulls up around the 38.2 to 50. So that's something to watch for. If that breaks down, then we are continuing down to our target, which is at 9,639, and then that of course will test this lower line here, which was down around the 9,200. That's very broadly speaking mark. Moving on to the Aussie market, you can see that the chart looks pretty different. This is a daily, but in fact, A, B, C correction, A, B, C, sharp pullback. That was a target that was reached, 4,258, and then it has come up also in a three-wave correction to test this descending trend line. And you can see that that's where it finished overnight, this long upper tail, the spike high. Well, it's pulled back very quickly to now be trading at 4,522, and it's currently midday on Thursday. So what would happen to this one? Well, we can also put a Fibonacci extension on that and see where the market's likely to go, and indeed targets for this would be 4,657, and in the event that that bullish alternative unfolded, as I mentioned for the Dow, then a target would be 4,910, which is the 61.8. In other words, an extension, 61.8% extension on this move here. But I wanted to look at the shorter term chart. And this is a 4-hour chart. It was one that we traded. You may remember that we had two trades at 4,428 and also 18. It tracked down nicely. We hit our second target, and then it sucked back, pulled quickly back up. We decided in the event that it broke through to put a stop loss at 43.79. Indeed that happened. Thank goodness we did, because it protected the breakthrough, retest, and then drive through last night. And you can see again what's happening on the current action today. That's 12 midday today, where it's pulled back very heavily. Where is that likely to come back to? Well, we would measure that whole length and say 44.54 is one possibility. Failing that, 44.14, and that would then allow us to look for the leg up, or indeed we'll get a feel for whether that is in fact going to break down and continue the bearish line. But at the moment we've got a triple top of sorts happening. What we'll need to do is assess the character of this wave, because if it is a 4, then we're going to go higher. If it's not, if that is a 3, and I suspect that they're equal legs, and let me measure them so we'll see. measure A onto B, and look at that, exactly at 1 for 1. In other words, this leg is exactly the same length as this leg. So again, we'll look for a wave 4 construct, and then it'll possibly go higher. Either that, or we've created a triple top, which it has a question mark over, and the alternative would be to see the MACD fall over. Cross of this line would give us the confidence to go short for that. So moving on to the Aussie dollar, very similar chart pattern, but I feel that it's important that we have a look realistically at what the upside targets might be. Again, that ABC, it's very common through these markets. Up, back, tested support here, and then this huge rise on the CPI, which was over analysts' expectation and has pushed up heavily. So what would happen? Well, we could expect a retest of this line, or in fact, if we looked at a shorter term chart, which is this one here, that's a 240-minute chart, we could easily measure it and say, all right, where is this likely to come down? This is the trend line. We'd be looking for support here. We'd also be looking for support around the 89, sort of 89 mark, or failing that, we would be retesting lows, and indeed we'd be looking for a fold over the MACD in order to go short if that was the case. But at this point, we don't know. What has occurred is that this triangle failed. In other words, we expected the B leg up in 3 waves, down in 3 waves. These are pretty standard fourth wave type patterns. Failure at E would have brought us down to our target at 87.18, but it didn't fail, and instead what we're looking at here is also a pattern which we can measure quite easily by saying, well, what was the target in the event that that held up with that strong CPI, and look at that, the same as the ASX 200 at 91 cents or just above. So looking now at the euro, just to get a feel for that, this is a daily chart of the euro. We were short this at 12850. I think we've been stopped out. The market is looking to go down, but it's also creating this bit of a distribution consolidation base. So a little bit of uncertainty lies here now. If we were stopped out, we'd sit on the sidelines to let the pattern unfold. Moving on to gold. This pattern is still in place. It has not taken out the high here, and in fact it could form a double top, but the upper end of this is at 1254. I think an initial earlier target I had was 1247. Well, it did that and then sucked back and then pushed back up again. But this trend line, if you were long this, you'd be laying your stops under it. When market forecaster is not long, but we'd be looking for a solid break of this trend line to be able to look at going short. But of course there's a little bit of market to unfold, including the non-farm payrolls out of the US on this Friday night. That's tomorrow night, so we'll watch with interest to see what happens there. The last chart I have to show you is the oil chart. We can see the breakdown in line with the falling main US indices. We can see that this came up and retested. This is a daily chart, so that's a number of days ago. 1, 2, 3. Well, it's come back up in support. That's a piercing line. There is the prospect that this could go higher, maybe to test the 200 moving average, or maybe even to follow the indices higher as we talked about. So a little MACD crossover there, but at this point we have to stand on the sidelines, and for more information on any of these charts, please go and have a look online at themarketforecaster.com.au. Thank you.